The financial trap of debt and the power of investing. By now, you all know I firmly believe that being in debt makes you financially trapped. Your income is your strongest tool for building wealth, but if you've committed it to payments, you can't invest and grow your money. The average car payment in America today is $503. That's just crazy. If you invested $500 monthly in a solid growth stock mutual fund from age 30 to 70, you'd have over $5 million. That one decision alone could make you a multimillionaire. I've built my reputation on helping people get out of debt because it changes everything: your life, your family's future, and your retirement. You retire with dignity instead of worrying about how to stretch every dollar. The fastest way to start investing is by eliminating debt first. But what's surprising is that most of the financial industry only focuses on the investing side of the equation. I've held all the certifications, degrees, and licenses in finance, and yet many so-called experts, whether advisors, writers, or bloggers, give investment advice without having real wealth themselves. They mostly cater to the wealthy because that's where they make their money. Many advisors won't even talk to you unless you already have significant assets. Years ago, I started teaching people how to invest. And after speaking with thousands of millionaires, I've seen what truly works. I personally invest in good growth stock mutual funds across 4 categories: growth and income, growth, aggressive growth, and international. I look for funds with at least a 10-year track record. Some argue you should just invest in index funds like the S&P 500. That's an option, but I prefer funds that outperform the market, and they're not hard to find. If a fund consistently lags behind the S&P 500, why would I invest in it? I choose funds that beat the market and my portfolio mix consistently outperforms. People criticize paying commissions for mutual funds, but having a financial professional in your corner helps you stay on track. Too often, people panic when the media predicts financial doom, selling at the worst possible time. A good advisor prevents those knee-jerk reactions. The key to wealth is not just picking funds, it's consistently investing. Research shows that 74% of retirement success comes from simply contributing regularly. Wealthy people don't just talk about investing, they actually do it. They commit to investing month after month, year after year. When I choose mutual funds, 80–85% of my decision is based on their long-term performance. I prefer funds with a strong track record, just like I prefer neighborhoods with mature trees when buying real estate. I don't chase risky investments. I focus on making steady money. Now, let's break down the 4 mutual fund categories. A growth and income fund, or large cap fund, consists of big, stable companies. Think of them as the blue chips of investing. These funds are less volatile, making them a steady option. A growth fund is made up of medium-sized companies. The S&P 500 index fund falls into this category. These funds typically perform in line with the market, though some can outperform. An aggressive growth fund is the wild one. Small cap companies, startups, and often tech-focused investments. These can skyrocket or crash quickly, making them highly volatile. International funds invest in companies outside the U.S. They have a cousin called global funds, which include both international and American companies. Historically, U.S. companies have outperformed international ones, making global funds generally a better choice than pure international funds. Still, having international exposure adds diversification. The bottom line, just start investing. Many people talk about it, but few actually do it. Millionaires don't get rich from a single lucky stock tip. They build wealth through steady, consistent investing. Don't chase quick returns or invest in things you don't understand. That's how people get scammed, trusting someone else with their money instead of knowing what they're doing. Many athletes and celebrities have lost millions this way. It's your money, just like your kids. You need to manage it. And while you don't need a finance degree, you do need to understand where your money is going. When choosing financial professionals, find someone with the heart of a teacher, not just a salesperson. I won't invest in something I don't fully understand, and neither should you. Wealth building isn't complicated, but it requires action, discipline, and knowledge. Thanks for watching. Don't forget to like, subscribe, and leave a comment below. I'd love to hear from you.